Hi everybody, and welcome to FANG Thursday. This is Ross Healy, the Chairman of Strategic Analysis Corporation and a Senior Portfolio Manager at McNichol & Associates Asset Management. I switched FANG Friday to Thursday this week for the first time in the 4 years that I've been on the air, as I am taking a 10-day break from the markets to enjoy some of this nice weather that we've been having. I'm crossing my fingers that nothing untoward happens before I'm back on air again, which won't be until Friday, August the 18th. I do so with some trepidation, as it always seems that when I do manage to take a break, even for a week, something unusual seems to happen. And what will be effectively 1 week plus can be a lifetime. So for all our subscribers, have a humdrum 1 week in the market and enjoy some of that summer sun. As long as I'm on the subject of humdrum, what could go wrong? Well, for one thing, the NASDAQ and the Standard & Poor's have been pulling back towards their respective support levels. The bubble price, or 7.4 times book value for the NASDAQ, and the super growth price, which is 3.5 times book value for the Standard & Poor's. Given the iffy values of some of the FANGs at this juncture, if we did get an overall market sell signal from these two indices, downside risk could be fierce for some of the FANGs, as we will see in a moment. A reminder that our own clients know where these breakpoint values lie all the time, and as the market has become increasingly expensive and risks continue to rise, knowing when to hold them and when to fold them, as Kenny Rogers might sing, is becoming increasingly valuable. Both Amazon and Apple are reporting tonight. I'm not expecting much in the way of any surprises from either one. And if their respective investor relations managers have done their jobs well, there won't be one either. So on that note, let's see what the FANG stocks have done in this earnings week. But before we take a close look at those FANGs and what's been going on, as always, I do like to say thanks to everyone who likes this video and all our subscribers. It really helps to grow our channel, and we appreciate it greatly. Okay, let's start off with Amazon, which is reporting tonight. It continues, it's broken out over its bubble price, as you can see, and it continues to hold above that level. As I say, I don't expect any surprises, and there has been a steady uptick in the expected fair market value, so I don't expect anything unusual to happen here. And by the way, note in this stock how precise that it has been at its various breakpoints. The second stock key stock to report tonight is Apple. And you can see here in this picture, it looks as if the stock is breaking down below its HB6, but I anticipate with share buybacks still going on that we're going to see that HB6 structural breakpoint is going to fall, and we'll see that the stock has not broken down as of yet. Meta is holding above its MSG price, and quite frankly, I anticipate that it is likely going to finish its run to its bubble price. Netflix continues to hold nicely above its bubble price. It's actually interesting enough. It's broken out, check back, big breakout, another check back, but it's rebounding again. So it remains on side, and I remain in the stock. Nvidia, look at what's happening in Nvidia. That fair market value has taken a sharp turn for the better. So obviously analysts are getting more and more optimistic towards the stock. It has continued to be rising in a series of channels on the upside. And I certainly expect that the HB6, which is 33 times book value, will continue to hold as the stock heads higher. Now, Alphabet is a little bit more of a conundrum, and see what I mean. Okay, look how sloppy the trading was. Okay, uncertain the trading was around its bubble price, and then it fell to its MSG price. That's 5.5 times book. Again, uncertain trading. Fell to its low super growth, 4.5 times book. Again, uncertain trading, and now it's back here again. I'm not sure what it is that the market is worried about, but this continues to what I call dither. And I am concerned about those kinds of stocks, frankly. Microsoft just will not break out over its HB2 price. And as a consequence, if I did not hold the stock, I would not hold the stock until it's able to break out. Finally, Tesla continues to dither at its HB3, which is 16 times book value. And small wonder, because the market still doesn't know whether this is an automobile stock that's very expensive or an AI stock, which may be cheap or not, as the case may be. But look where the fair market value is. Okay, if anything ever goes wrong with this company, be very careful. Now, to summarize, looking at the FANGs, there's only modest evidence of any impending market weakness. The FANGs have pretty much held in with their heavy focus on the artificial intelligence excitement. 5 of the FANGs, Amazon, Nvidia, Apple, Netflix, and Meta, are holding at or above their current SVA support levels, and looks to me as if they want to head higher as long as the market remains on side. But please note, from an intrinsic value perspective, none of them represent solid and secure value. Let me make an observation that you need to hold near and dear to your heart. That fair market value line is what we term a magnet value, pulling the share price towards it, or pulling the share price in the case where the fair market value is above the current price. We've already seen in the past couple of years that when markets are weak, that is where the prices head. Okay? And both Meta and Netflix actually fell all the way down to and below their respective fair market value measures, a decline of more than 70% in both cases. Users of our service can readily determine the risks in their portfolios by simply observing what the fair market value measure is for each of their stocks. In these interesting times, you too may want to know what you may be facing as well. On y va. Alphabet continues to dither around its MSG price. That's 5.5 times book. And I suspect that the market, meaning the NASDAQ and the Standard & Poor's, will pull it higher. But I have to observe, kind of off the record, that I distrust clear evidence of uncertainty. And Alphabet is about as uncertain as I have ever seen. Microsoft had dull numbers, and unlike some who also had dull numbers, management did not wax poetic about its outlook. This is a market that wants to believe, and it does not particularly wish to hear the caution horn sounding. We need to see a breakout here before we ourselves can believe. That leaves Tesla trying to cling to its HB3 price, 16 times book, with an open question hanging over its head. Is this an expensive car company or a cheap high-tech enterprise? For now, I will go with high-tech enterprise, but I never tell the stock market what to think, and we will have to watch to see which way the stock and the market will jump. As this is a very heavily weighted group of stocks, I still think that it is a fairly decent bet that the NASDAQ and the Standard & Poor's are heading higher. Nothing against the value stocks, which I suspect are biding their time, although the Dow had certainly been enjoying a nice little run recently. But this still looks very much like the period leading into the high-tech stock peak 23 years ago. We are not there yet, so hopefully we can just enjoy the FANGs for now. Strong support for the NASDAQ and the Standard & Poor's is very close at hand now, and I trust that you have made note of where support for the individual FANGs lies. A final word to any of our viewers who may have come late to FANG Friday and may be wondering what exactly is going on with this SVA methodology that you're watching here today. Well, if you'd like a thorough introduction to the analysis, the how and the why it works in practice, then please visit us at strategicanalysis.ca today. For now, this has been Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools. I'll see you Friday, August the 18th.